Welcome to Accenture's Insurance News Analysis. I'm Abby Compton, here with Kenneth Saldanha, Accenture's Global Lead for Insurance. Kenneth, this is our first Insurance News Analysis of 2022. Happy New Year to you. How are you?
Very well, Abby. Happy New Year to you as well. And we're off and running in the first week of the year. So happy to be back at the, what's new in insurance news with you again.
Well, I can tell you 2022 is already giving us lots to talk about in insurance news. The UK's Financial Conduct Authority has said that insurers must now offer consumers renewing home and auto policies the same prices they offer to their new customers. The FCA say this new rules may save consumers £4.2 billion over the next 10 years. How is the industry responding to this, and will we soon see similar regulations in other markets?
Yeah, Abby, this is one where I'm honestly a little skeptical about how this will play out for two reasons. One that's more customer-centric, the other that's more about the industry. First off, on the consumer side of this, on the customer side of this, we don't see, from our research, we don't really see consumers thinking of themselves in very static new versus renewal buckets. I think consumers go out to market. I think they feel the desire to shop and compare what they can get in market on a fairly fluid basis. And so I think the notion of new versus renewal from a consumer perspective is probably not really a distinction that they see. Now, I can imagine what is being addressed in this regulation is the notion of bringing customers in with a lowered price for a new business and then moving renewals up. That's why I think consumers aren't really going to feel themselves locked in a way to sort of stay with renewal pricing. So I really don't know if consumers are going to play into that dynamic at all. Secondly, from an industry perspective, certainly insurance is pooled risk. And so if you are going to cross-subsidize across your segments, new versus renewal, it is going to wash out in the economics. And so I'm not sure I fully understand the analyses that would say there's going to be a whole new pool of savings driven by forcing parity across these. I think pricing models are pricing models. Consumers are consumers and they're shopping whether for new or renewal. And so I think the change that we're going to see is probably going to be fairly minimal from an operational perspective. I think there may well be some dynamics that get a little bit more controlled around how offers are positioned, new versus renewal. But I don't think the fundamental economics of what's happening with these offers really is going to change much across that aggregate pool.
Well, pricing seems to be on everyone's mind. In your 5 predictions for 2022 blog post, you talk about a coming property pricing and profitability reckoning driven by inflation pressures and more systemic problems like upended risk models and increasing capital requirements. Kenneth, is this reckoning to come as ominous as it sounds?
Certainly, Abby, maybe it was a bit of a hyperbole in the framing, but I do think there's a very, very substantial change and a very, very substantial assessment that's going to happen in property. And we need look no further than even the last few weeks of the year in North America, for example, where we had tornadoes running through Kentucky with massive damage. We had a flash wildfire running through Boulder, Colorado, causing a bunch of damage. These are not things that we are typically expecting to see in the middle of December, right? Tornadoes and forest fires. And I think that fundamental change that we're seeing from extreme weather playing out in property is going to cause a real change in the fundamental economics of property insurance. So I do think there is a substantial reckoning that is going to have to play out in how property is across the full chain, how we think about the actuarial capital reserving and pricing, how we think about the actual underwriting and the product side, how we adjudicate claims, and how agents actually sell and market around property risk. I think it is a major change, and certainly, as you said, driven off inflation and generally kind of a real estate market on the consumer side, major changes in usage of commercial real estate, lots more vacant, empty buildings, and everyone's very familiar with the fact that actuarial models have shown that vacant buildings tend to be a lot more prone to risk. So I do think, maybe you can take fault with the choice of words of reckoning, but I think in terms of whether in fact we're going to see property come under a lot of scrutiny and a lot of change, I absolutely think we're going to see that.
Well, a chilling wintertime story from here in the DC area. A series of accidents and heavy snow left hundreds of motorists stranded overnight on Interstate 95. Kenneth, in the age of vehicle telematics and weather alerts, how does this happen? And what can insurers do to help customers steer clear of these hazards?
Yeah, Abby, I think this is an amazing example of, I think, something you and I have talked about in the past, which is this dichotomy with consumers around, on the one hand, a willingness and a desire to exchange data and use things like telematics in exchange for personalized offers. On the flip side, a real concern about the willingness to actually have insurers intervene or to be able to reach out through notifications, et cetera, from a privacy perspective. And I think we're seeing that dichotomy in terms of, am I willing to share information versus am I willing to have my privacy sort of invaded upon by notifications in exactly this kind of situation. I think from an insurer perspective and from an intent perspective, you're exactly right. Telematics, risk mitigation, avoiding losses before they occur would absolutely, the capability is absolutely there, right? It is not a surprise that there was going to be extreme weather, that it was not a great time to get on the interstate. That information, that data, and the ability to predict that outcome was absolutely available and was probably made available to a number of consumers and for motorists through their apps or through their risk mitigation notifications. But I think there's still an extreme unwillingness to actually have your insurance company look over your shoulder and say, should you be driving at this time? And should you be getting onto I-95? And that's, I think, a very real privacy concern for consumers. So, I think, should we be able to avoid that from a technology and a capability perspective? Asked and answered. I think that telematics answer is widely available. Are consumers ready to take that guidance and act on it? Very much up in the air, right? And I think we've seen this play out even in the past. I think the running joke is, we embedded sensors and cameras in all of the bumpers of the cars, but our drivers are too busy texting to notice the beeping, and so they're still colliding with things. And so our promise of, sensors are going to end claims, and we're not going to see auto physical damage anymore because we've made the car so much safer, really hasn't played out. And I think we're going to see that also in a little bit of a cycle back and forth in terms of telematics and risk mitigation versus privacy.
Kenneth, the human toll of COVID-19 is heartbreaking. Life expectancy has decreased 9 months in the UK and 1.8 years in the US. And we've seen record life insurance claims. Is the pandemic experience changing how L&A and group and voluntary benefits companies assess risk?
It absolutely is, Abby, and it's as you said, just an incredible toll that's being taken across the board. And I think of that both from the industry perspective, and as you said, the sheer volumes of claims. Whether you're looking at disability, whether you're looking at unemployment, you're looking at life insurance, they're through the roof. And the operational toll of that, alongside the emotional toll of that, is one that is just kind of feeding on each other. I mean, we've got adjusters and operational folks who are in the midst of personally their own dealing with COVID and their own dealing with the pandemic, working in an environment where volumes are way up and everyone who's coming into the claims process is in an incredibly heightened emotional state. The entire environment that we see in disability, life, FMLA claims, all of these areas is incredibly difficult, and it's felt by every single frontline call center or claims adjuster out there as they deal with these incredibly personal, incredibly painful situations. Whether you're talking life insurance or you're talking disability or any of those various claims, there's no doubt that insurance companies are in the midst of, both a short-term crisis around this in terms of how the service level, how the claims experience, how the employee experience, how the overarching stressless environment has to get managed through. And we certainly see that. We actually do a lot of claim service for disabilities and life insurance carriers, and in our own teams, we see the stress this is causing. There's also the long-term implications of this, which I think you raised, which is, this isn't a one-time event that's just going to go away. We're clearly in this for a sustained period of time. We're going to see most likely new waves and new issues of different kinds of pandemic concerns. And so I do think insurers have to find a way and are actively solving this as they go, both for the short term to get through where we are today, as well as where the industry is going to move with this, right? Because I think what's very clear is the customer experience side of this and the carrier experience with this, both things are unsustainable. So I think we are seeing both a lot of work done to how to bridge the near-term issues, as well as shift the models in the longer term.
Well, Kenneth, I'm so glad that we had the chance to catch up here in the new year, and look forward to many more discussions to come in 2022.
Sounds great, Abby. I look forward to it. Good to see you again this year.